Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight, the Australian dollar didn't stage any significant moves, even though the geopolitical tension between the US and Russia has eased. Overnight, in a Twitter, Trump never said when an attack on Syria would take place. Could be very soon, or not so soon at all. In any event, the United States, under my administration, has done a great job of ridding the region of the ISIS. Where is our thank you, America? That was quite an interesting tweet from Trump. But with the tension eased, what's surprising is the Australian dollar didn't really move anywhere, but instead posted a doji. This is in terms of indecisiveness. And at present, I'm still a seller towards this region of 77.90. Overall, I do expect to see the market foul from any rally at present levels and look back towards the downside, which comes in at 77.25. Overall, my view is still towards 76.30 region, and this opportunity where the market's currently trading is a potential short to see the market sell off eventually. Overnight, the US dollar index gained further ground, and after previously closing at 89.16, the market rallied to 89.40 overnight, posting a better close that we've seen in the last 3 days, where the market retreated, and also the euro in terms has actually failed from the top side and now looks towards 123.15 and still on track to challenge the downside level of 121.80 to 122. Overall, any advances, I still expect to see the market fail towards the region of 124.45. A couple of things to note with the US dollar is the fact is that we did get the release of the US CPI this week, which was up by 2.1% year on year. A little slightly better than forecast. And also to note is that the FOMC minutes still keeps on track that we should see a hike either in May or June. So while the market slowly digests these numbers and also from the minutes that was released from the FOMC, I do expect to see a weaker euro. And also we did have Mario Draghi out last night, and his comments didn't seem too much that he felt that the effect of the trade tariffs was okay in terms of where the market sits, but he fears that further down the track what comes out of that scenario. So that also is interesting to see as well. The dollar yen recaptures the 107 handle and now tackles the 107.35, looks towards 107.30. It is anticipated, as you can see from the last few days, a base is building from 106.55.60 and we could see a break of 70. If so, this would see a rally on towards 108. I do believe there are stops building above this level, so it'll be interesting to see if we do get a break. The pound has recaptured its bullish momentum now for the 5th straight day and reclaims a 142 handle. Overnight, the Prime Minister Theresa May has called for a special cabinet meeting where she is expected to talk with the permission to engage a Syrian action. She said that on Thursday, the UK is prepared to join military action against Syrian regime following its apparent use of chemical weapons. It is a potential lead-up with France and the US against the Syrian President Bashar al-Assad, which apparently says that weapons of chemical nature were used. So we'll see what comes out of that. As from a technical point, though, we do have Mark Carney speaking in Toronto in Canada tonight. That could see a little bit of an uptick to the upside because the market is expecting a hike in May. Therefore, the pound may actually rally on towards 142.90. Now, above there would give further scope towards the region of 144. This roller coaster ride for gold still remains in a 13 figure to 1360 and still plays out the range quite respectively. With the rejection of the 4-month high, 65, the market is now questioning whether it can retest that level, purely for the fact with the tension between Russia and the US easing somewhat. On the day, I expect to see the market contest the support of 35, and if it does break beneath there, we could see further weakness. That was the low this morning. Beneath there looks towards 28, with the base holding at 22.23 and the broad base holding at 1,300 and the figure. Silver also backs away further from the topside rejection of 85 and now looks towards the support that comes in at the moment around 40.45. Overall, we could see a little bit more weakness, but I'm not getting too bearish. I want to start looking to buy the silver soon, so towards the lower side of the range of $16, $15.20 is the better case to see a rebound. And rounding off with oil, I am not bullish at these levels, with the commodities weakening slightly as the geopolitical tension eases. Is that oil most probably could even fall as well. Tonight we do have the Baker Hughes report. Now last week it did note that 10 rigs were put into the ocean or around the vicinity, and topping up a number of 808 rigs now in that are actually working. In terms of the market though, this is the highest number seen since 2015. If we get more rigs added into the ocean or ground, then this could see further supply. This would mean that the market may sell off. Therefore, I'll be looking towards the region at the moment of retreating from current levels to $65.65 or down to $64.70. Well, that rounds up for today. Thank you very much for joining me. As always, look out for the intraday reports, and I hope you enjoy the day and have an excellent weekend that's about to commence.